Hello everyone, hope you guys are doing well. Welcome to another live stream. So this one is on a Friday. I couldn't make Wednesday or Thursday work, so we're doing it on Friday. Hopefully you guys haven't winded down for the end of the week. Hopefully some of you guys are still interested in trading, because on Friday usually people clock out. But we're here, we are in the markets. So if you guys have any questions, make sure to put them in the comments, in the chat. We're going to go through every single question. And let's get started. Hello, Charles. What's up? How are you doing? So let's get started with our analysis. Currently, the watch list is empty. So I have stopped trading, or I still have 1 hour until my cutoff time. If you guys are wondering, I start trading at 8 a.m. London time on a Monday, and I stop trading at 5 p.m. on a Friday London time. So here is the euro and the US dollar. And what can we spot right here is there was a couple of opportunities in this price action. So let's rewind it to the time of the last recap, which was, or the last live stream, which was around here. And let's mention all of the opportunities. So I did take a trade right here. It was a liquidity sweep. Okay, with a 10 pip stop loss. For me, this was a liquidity sweep, which is our range bound entry. It is when we identify a flat range, preferably inside of the major low and in the major high. Price just ranges around and then goes into the liquidity. In this case, it went into the lower liquidity, and there's a high probability that this price will reject from this level, okay? There's a high chance that the price will reject and maybe hit our take profit. So that is exactly what happened. We moved down, double wicks, blue candle, entry candle, I got in. 10 pip stop loss. I did aim for a 3-to-1 risk to reward, and unfortunately this one was a loss. I risked 0.5% on that position, because on the euro and the US dollar, I'm still researching the liquidity sweep entry. It is still not 100% refined, 100% researched. So because I'm not 100% confident, I'm not going to put in 1% risk as I'm doing on, let's say, the Aussie and the US dollar. Next trade that we can mention was right here. Nice reversal opportunity. So this is actually a pattern that we like to trade. It is when you get a flat range. So you get a liquidity area, as we said, in this case, we pierced below, but we were looking at the one above as well. And then you get like a small descending right here, and then the price reverses up and usually starts a nice uptrend. So this is a bullish pattern, okay? and it happened here. So we had the range, we had the descending structure, we had the break of the high with momentum, with force, nice clean close on the top, and you could have got in right here on the top of this inside bar. You could have done this. But for me personally, the break and the candle was just not enough. It didn't have enough strength. It didn't have enough momentum for my personal preference. So I did stay out of this trade. It just wasn't big enough. It wasn't convincing enough. Okay. What did happen? This would have been a loss if I took it. So it's good that I followed my plan. But again, if you did take this trade, I don't think it was a bad one. I think there was definitely a opportunity to get in here, but it didn't fit the plan for me. Okay, I just wanted a bit of a more convincing bullish shift, bit of a bigger bullish candle, and then I would have considered it. Next opportunity, right here, I had my sell limit. I liked the momentum. This blue candle, a bit of a warning sign, but then we break the low, clean close. Or did I actually take this? I don't think I placed my order here. No, sorry, I didn't. Sorry, I didn't. I did place my order right here because this had a better break. Right here, I had a sell limit on. Okay. But right here, I didn't, because this break was not enough. I'm just now remembering it. Like, this break is really not big enough. This candle is not big enough. It's not that big either. And then the break is just really tiny. So yeah, I didn't like it. When it moved down like this, then I definitely did like it. At this point, I think it was a good setup to look for sells, okay, because we had definitely had some nice bearish pressure, bit of a pullback, break the low with force. So that definitely was looking interesting. All right. But the distance to my entry level, my entry would be on the low of this inside bar. The distance to the entry level was just too big. Okay. So I kind of wanted to see a slower retrace to our entry level like this, so that the price kind of trickles. Okay, so that the price kind of trickles to the upside. That is what I wanted to see. Then we moved up, broke the high, retraced. So this would have been a loss. You could have also looked for a flag right here. So first low, first high, second low, second high. The red candle would be the entry candle. You could have looked for that flag. For me personally, I just saw a shift right here in this candle. The shift was too big, so I did not want to enter. Okay. I would have liked to see a tighter flag like this potentially, right? So like a tighter flag, a smaller flag, but this one was just too big with that blue candle. So it didn't fit the plan. Next opportunity was a flag that formed right here, currently running in profit. So yeah, currently running in profit. Per price action, we had this ascending structure right here. Then we had our flag formation, first high, first low, second high, second low. Blue candle would be your entry candle. You would get in right here. Could have used 10 pips. I think I would if I had taken it. And it would be running some percentage right now. It would be running maybe like 1% of profits. Okay, so that's okay. That's pretty good. For me personally, I didn't take this trade. I know Nico from Zentum Trading. He did take this flag setup. Charles is sad. Did you look at this trade, Charles? For me, I didn't like this part, this red candle. Okay, and the per price action was not the best. It was not looking the best. And I didn't like this red candle. If the red candle was smaller, if it didn't show a shift in momentum, I would have taken a flag And I was looking at it. I definitely had this trade on the radar. If something like, I take the sad face back. So if something like this had happened, I would have taken this trade. Okay, for sure, because the impulse was nice, the impulse was all right. There was no wick on the top, so I think par price action, yeah, not the best. Par price action was not the best. You could make a case for a large descending, but again, then we had kind of a descending into an ascending channel, so not the best. This candle just, I didn't like it. It was too much selling pressure for me personally. But for Nico, he took it. It is now running in some nice profit, so it does fit Nico's plan. For example, we all trade a bit differently, but at the end of the day, all of us can make decent percentage. It doesn't matter if we take a different trade here or there. Overall, we do have a profitable back-tested plan, and we do know that all of our plans do work on a large sample size. So good luck to Nico. Hopefully, this can smash the high and continue going up. That would be pretty nice. Maybe next week this can even continue and like this, and we can get maybe a buy setup. Okay. Am I gonna put this pair on the watch list? Yeah, you know what? I can, because I kind of like this as an ascending channel, like this, which is a bearish pattern. So an ascending channel is a bearish pattern. And we broke the high right here, 1, 2, 3, 4 times, 4 consecutive breaks of the high. That is pretty good. We definitely expect the price to go down. Okay, definitely expect the price to go down. So yeah, that's pretty nice. And it's gonna go on the watch list. Okay, Euro Japanese yen. Let me highlight some of the price action from the euro and the Japanese yen. So did we get any trades? Did we get any interesting price action? Pretty flat right here, went up pretty correctively, went up. Then we had some nice bullish momentum right here. At this point, I would have maybe considered a flag. A flag did not form. I know some people were looking for a break and retest. They had placed a buy limit like this. For me, it did not fit my personal plan. Why, you may ask? Because this break was not enough. It had a wick. Also, triple wicks in the par price action as well, signaling weakness. So triple wicks, break of the high, pretty weak. Break of the high, wick on the top, just not the best. Not the best. And then we go into a flat range. Pretty corrective price action here, so I'm just gonna look for a large push up or a large push down. Okay, that is gonna be on the radar. I'm not gonna put EJ on the watch list currently. For me personally, on the 1 hour chart, this is just looking pretty flat and corrective. So we're gonna go to the next one, Aussie US dollar. From the last Thursday, I believe, kind of ascending. Nothing really happened out of that. Yes, there was this impulse down. I was looking for sell setups. I was definitely interested to look for sell setups, but again, we just kind of fizzled out. No high probability entries formed. This break was not enough if you were looking for a break and retest sell. That break was definitely not enough. Okay, flat right here on the top. Range bound, yes, this impulse, I was looking for a trade, but nothing happened. No high probability entries. We dropped down. And at this point, I did really like this price action. I'm not going to lie. I liked this bearish momentum. So if you don't know, the fundamentals for the dollar pairs are dollar strength. Okay, so the fundamentals are highly, highly in favor of the dollar going up and all of these pairs going down. As the dollar is gaining strength, Euro US dollar, Aussie US dollar, Pound US dollar go down. Okay, now fundamentals are not something that I make a trading decision off of. But again, they are important to mention. That is why you saw a big downtrend on most of the dollar pairs. See here, big downtrend. And it's something I have in the back of my mind. Lately, it has been having a lot of impact on me. Let's say I have been researching fundamentals. I want to maybe add them in as a confluence. And you want to be aware of what is happening in the markets. As a trader, you definitely always want to keep expanding, always learning new things, because the fundamentals are what moves the market. You need the news, you need the CPI, PPI, NFP, Bank of Japan interventions. You need that stuff to create trends. For example, last intervention from the Bank of Japan, or maybe it wasn't the last, but it was a big one. In July, we had a massive sell-off. Let me show you. EJ, let's go to the daily. See this thing? Massive sell-off in July. That is when the Bank of Japan decided to back the Japanese yen and to pump, I don't know, maybe 20 billion or something like that to strengthen the yen. And that is when all of our pairs, Japanese pairs, dropped like crazy. And I made some really good percentage. So if the Bank of Japan can make one more big intervention, that would be pretty nice. That would be pretty fun. Here was another one. I think this was another intervention because it's a massive drop. So the intervention data should be published on the internet, but I think it's only published 1 month after it happens. So this data was published, I'm guessing, in August. So you only knew that it was an intervention in August. Okay. So where we were at the Aussie US dollar. Again, I'm focusing on the technicals for the actual entries. Right here, I did see a lot of potential, nice impulse, strong momentum, pullback, no buying pressure, break of the low, clean close on the bottom, very nice, very high probability, right? But I just didn't want to see a straight impulse to my entry like this. I wanted to see a bit of a slower impulse, maybe an impulse that comes up in 2 candles. That would be pretty nice. All right. But in the end, we just printed the wick. Unfortunately, or maybe fortunately, because if I was tagged into this position, it would clearly be a losing trade. So maybe it was good that this wick printed. As you know, I don't like wicks. I really don't like when wicks print. Okay, current price, pretty flat, pretty corrective, pretty range bound. This pair is not on the watch list. I'm looking for a push up or a push down, just range bound markets. So being more patient on the Aussie and the US dollar. AJ, let's see. There was one opportunity. There was this flag. There was this flag on a Friday. I think it happened right after the live stream last week. And first high, first low, second high, second low. The blue candle is your entry candle, okay? But for me, price action was just pretty flat, pretty corrective, pretty range bound. The impulse had a bit of a slowdown on the top. So for me, there were just too many warning signs to actually look for a buy setup right here. And I did decide against this trade. I think it would be a loss. Yeah, I just kind of did nothing, just fizzled out, was flat. So it's good that I followed the plan. Good that I followed the plan. All right. Here, I was looking potentially for a setup, but just it was so many wicks, wicks all over the place, pretty corrective, pretty range bound price action overall. We were even stuck in a range, so not good, not that great. Then we push up, pretty corrective on the top. I would have liked to see a buy setup. I would have liked to see a clean close like this on the top. That didn't happen. Instead, we broke the high retrace, kept leaving wicks all the way to the upside. Then we kind of descended broke the high, large wick retrace. So the conclusion from this price action is that it is not conducive, it's not good, it's not high probability, it's not clean, it's pretty corrective, it's pretty flat, it's pretty range bound overall. Yes, again, there was some momentum, there was some potential here. I definitely had my eyes on this price action, but it couldn't commit, and it just continued to be flat and range bound. And if you squeeze out the price action a little bit, you don't have to go to the 4-hour or the daily. We can even spot it on the 1-hour chart. You can see that we are overall pretty flat, right? Only EJ has broken out. See, this is the euro and the Japanese yen. We had the flat range, and then we had a big breakout to the upside. We had that really strong, really nice momentum. But AJ is still kind of stuck in a range. So I'm just going to be more patient with the Japanese pairs. As I said, a intervention would be great, right? If an intervention happened on a Japanese pair, that would be great because it usually sparks a nice downtrend in most scenarios, because the Bank of Japan is expected to defend the Japanese yen. So when they defend the Japanese yen, they push the price of the yen up and all of our pairs go down. So hopefully something like that can happen. Hopefully we can get a big trend. But the dollar pairs are moving. The fundamentals are pretty weak or pretty strong for the dollar, pretty weak for our dollar pairs, and they're moving, right? If you squeeze out, EU is definitely moving down. Aussie US dollar definitely moving down as well. Pound US dollar, which is the next pair on the list, definitely moving down. So pound and US dollar. Let's see. I think we covered this. This was a pretty bullish pattern with the descending structure and then bullish momentum. I was looking for buy setups. Unfortunately, we could not commit. And then we just started printing a lot of bearish pressure, which was a big warning sign. It was not good right there. Then we had this price action, and this was pretty good. I like this momentum. Just these two candles alone are enough for me to look for a sell setup. And as I said, overall, we are moving down. So we are overall in a strong downtrend. So I was potentially looking to see if I can get in on sell setups. Unfortunately, nothing happened. We just kept breaking the lows, and we kept retracing. So not the best story. Then we broke lower. Here, I also saw some potential. We discussed this on our Zentum Wednesday call. We had a push down, pullback, push down, no shift, pullback, push down. Nice strong momentum right here. Nice big candle, nice big candle. So two big bearish candles. This one is pretty good as well. Pretty nice, I have to say. So I was looking for a buy setup. I definitely would have liked to see a sell setup. Sorry. Overall price action moving down as well. As I said, the fundamentals are pretty heavy on US dollar strength. Let's also see some news going into the next week. Not that important. We're going to have NFP soon. Not next week, but the week after that, I think it's going to be non-farm payroll, which is a big volatile event. Usually you get nice movement, a lot of volatility, and possibly spikes a uptrend or a downtrend. Okay, so pound US dollar. Here, nothing happened out of that. We just had too much buying pressure. So when I saw these two candles, that was enough for me to scratch off this trade and for me to say that this is not going to be a high probability entry. It's not going to fit my plan. Okay, broke the high retrace, broke the high retrace, broke the low retraced. Here we were pretty flat and range bound. So this pair is not going to go on the watch list, unfortunately. It's not looking good. It's just being pretty flat and pretty range bound. Okay, as you can see right here, pretty flat, pretty corrective, pretty range bound. And I'm going to wait for better price action. I'm just going to wait for a nice simple up or a nice simple down, something like this. Okay, this was good. Of course, we never got the high probability entry, but this bearish pressure was pretty good. That is what I like. And if we can go down rather than up, that would be even better, right? If we can go down rather than up, that would be pretty high probability in my book, as the fundamentals are, as I just said 100 times, they are strong for the US dollar. Okay, next one is going to be New Zealand and the Japanese yen. That is going to be the final one that I actually trade live. After that, we're going to take a look at some of these ones. Okay, just check out Bitcoin pretty quickly. Okay, it's not moving much. NJ. So NJ was interesting. From the last live stream, we did have a couple of opportunities. Let me just close the Discord. So we had this flag. Now, I know some people were looking at this flag. First high, first low, second high. This can be the second low. For me, in the end, it just ended up being, the flag ended up being too big. Okay, I just saw too much selling pressure, I would say. Price action was pretty shit. Overall, it was pretty flat, corrective, and range bound. If the flag was smaller, so let's say if the flag was this big, so if only this was the flag, I would have taken it. But in the end, it ended up being too big. The flag was too big for my personal preference, and it didn't do anything. So it would be most likely a loss. It would go, yeah, it would take me out right here, probably. We were flat, pushed up. There was another flag you could have taken. I think some people actually did take this one. Let's highlight it. So first high, first low, second high, second low, blue candle is the entry candle. But my main goal is to get clean price action, right? So I'm really, really patient. I'm only looking for the best. I'm looking for the 9 out of 10 or 10 out of 10 setups. I'm looking for the cream of the crop. I'm looking for those points in the market where the risk to reward is so high and the profit expectancy is pretty high as well that it just makes sense to be in. I'm looking for the no-brainer trades. There's not been a lot of them lately, unfortunately, but that is the temptation of the markets. That is how it goes. That is how the weak hands get shaken out. It's not my first time going through a quiet period. So I'm kind of already gotten used to it, but it's always tough, right? It's always tough on the psychology. This wasn't a no-brainer for me. The huge double wicks here, wick here, double wicks here, double wicks, huge double wicks. This entry by itself was not high probability. Only thing going for this trade was this momentum right here. It was Tuesday as well, which is another warning sign. So Mondays and Tuesdays are pretty range-bound days, and you wouldn't expect a lot of the trades to actually play out. Price action was pretty flat, pretty shit. Overall price action was pretty flat, pretty shit. So I didn't take this trade. It would be a winner. So if I did take it, I would probably take it with a 12 pip stop loss. 12. It would be maybe like a 4% winner, something like that. So it would be a winning trade. But again, didn't fit the plan. Ascending on the top, here you may ask, well, was I looking for a reversal? As you know, an ascending channel, whatever the size, is always a bearish pattern in my book. I wasn't looking for a sell setup. This momentum down wasn't enough. It wasn't clean enough. The ascending was not that big either. Broke down, I was definitely interested at this point. I did like the momentum at this point, but huge wick, big retrace after that, that's not good. That's just too big of a warning sign. So no, in the end, I wasn't looking for anything. Broke the low retraced, started to print this descending channel. Okay, so started to print a descending channel. As we can see right here, I don't know, not the cleanest. Also, overall price, just squeeze out the price action a little bit. Look at the bigger picture. Pretty flat and corrective, right? So, not the best. I know I focus on the last 3 to 5 days of price action, but it's not written in stone. And it is smart to zoom out and have an idea, a general idea of what is happening in the larger scale. And the price is just flat in this area. So, that in and of itself is a pretty big warning sign. You have this major low, you have this major high. Until those break, I'm not going to be very convinced in taking setups. So the descending didn't play out in the end. Okay, this was the descending you would expect. So it is a bearish pattern. You would expect something like this to happen, which didn't happen. Instead, we broke the high, retraced, broke the high, huge wick, retrace. All right. So not the best. And it's not going to go on the watch list. I will just look for a large push up, or I will look for a nice large push down. That is going to be it for me. NJ is not going on the watch list. EJ looks even better, you could say, because it has broken out of this flat range. But all of the JPY pairs are just not looking convincing enough. I like the dollar pairs more. I like the dollar pairs more because there's a general direction with the dollar pairs, while the JPY pairs are pretty stuck in this corrective flat range. So that's not the story you want to see, right? Not the story you want to see. Okay, so that's it for NJ. That's it for all 6 of our live trading pairs. Next, I'm going to go over some of the very popular instruments, such as the S&P, gold, Bitcoin, dollar index, US oil. So it's going to be a quick analysis. It's not going to be very deep. And I'm going to focus on the daily chart. Why? Well, because the 1-hour chart, just I want to see what is happening on the larger time frames. The 1-hour chart is not that significant for me when looking at the macroeconomic picture, you would say, okay. So the first one on the list is going to be the S&P. And yes, I am looking to add these instruments into my live trading. I have been backtesting the strategy that I trade on Forex on some of these instruments. It doesn't work as good. Okay, so a different approach is definitely needed, but that's okay. Every market is a bit different. Everything moves a bit differently. So I'm not going to cry about it. I'm going to try to develop something that's going to work for other instruments. And so the main goals are researching new instruments, trading new instruments, and implementing the fundamentals as well. Okay, I think fundamentals have a big power. Used to ignore them, but I have done quite extensive backtesting of an implementation of fundamentals and technicals, and the results turned out pretty good. The results were pretty good. So it makes sense for me to research that further. S&P 500 moving up, starting to struggle here on the top, just a little bit. Okay, we're still not getting that major sell-off. We're still not getting that major weakness, but it is starting to struggle right here on the top, right? Starting to struggle. So it's not as good of a story as it used to be, but it's still pretty bullish. I'm going to remain bullish on the S&P. The reason I don't look at the 1 hour, because look, the 1 hour just looks like this, right? Small says, did you take NASDAQ today? Super crazy move, 22 to 1 for me. Yeah, let's take a look at the NASDAQ. Let's do it. NASDAQ. On which time frame? Which time frame are you talking about? NASDAQ is also maybe starting to struggle. S&P looks definitely better because NASDAQ didn't break this major high. S&P did break it and just started trucking up. One thing you need to know, Forex, when it trends, it's a bit different than the S&P and other indices, okay? Forex tends to be a straight shot. That's at least what I saw on the 1 hour chart. The S&P likes channels for some reason. It likes these bigger channels, and the trends are not as stable not as stable as on Forex, and there are gaps as well. It's a bit of a different market. So Nasdaq, let's check out the 1 hour if we can spot that massive move. Maybe you're talking about this thing right here. So no, I do not trade the Nasdaq. It is an interesting index, but I don't trade it. And overall, I would say on the 1 hour chart that Nasdaq is pretty flat for my personal preference. The daily may be starting to struggle. But again, we have these bullish patterns, which are the V reversal. Usually you get, the pattern goes like this. You get a V, get a bit of a range. Some people call it the cup and handle. Some people call it the inverse head and shoulders. All the same thing. The outcome is the same as well. You get possibly an uptrend. Oh, 5 minute and the 15 minute. Okay, interesting. Yeah, I don't go down on those time frames. I don't go as low. There was definitely a massive move up. Definitely a massive move up on Nasdaq. Okay, gold. Woo! Let's see the daily. Okay, gold is extremely bullish. I thought the 1 hour chart was the daily chart, but on the daily chart, gold just seems to be very bullish. Just keeps on trucking, just keeps on shooting up. Massive momentum, massive movement. Am I seeing any signs of a slowdown? Personally, no, not really. On the daily chart, I'm not really seeing. 1 hour chart, this looks pretty clean. If this was Forex, this would be pretty clean, right? You have this ascending structure, pretty nice ascending structure. Pretty nice drop as well. Again, the ascending channel is a bearish pattern, so I do like this drop. And I would be looking for a flag. A flag did form. First low, first high, second low, second high. Red candle is the entry candle. But it would be a loss. So on the daily chart, very bullish on gold. Gold is just keeping on shooting up. It has some massive bullish momentum, so that is pretty good. Pretty good to see. At least it's moving. What I really don't like is range bound and corrective markets. When something is moving up, when something is moving down, that's great. That means I as a trend trader, I can make profits. But if something is flat, corrective, and range bound, that means I cannot really make any profits. And that means I need to sit on the sidelines. So if the gold is moving, I think that's great. And yeah, hopefully it continues going up. Silver is going to follow, and it is following. Silver is usually more volatile than gold, so the moves tend to be more erratic, right? More erratic moves. But I think gold looks much cleaner. Just by looking at the chart, gold does look a lot cleaner than silver. Bitcoin is interesting. Bitcoin is pretty interesting. It has broken that big trend line. If you would draw it like this, right? We had this descending channel, which is a bullish pattern. Broken the trend line, so that's pretty interesting. You could be looking for buy setups right here. I wouldn't jump the gun. I would still wait and see how this major high will react. Okay, I definitely wouldn't jump the gun. I would wait to see what happens on this high. If we break this high with force on the daily chart and the next candle continues, that's a pretty bullish story. Pretty bullish story on Bitcoin, and you can expect, I would say, a massive rally. Okay, so that would be a pretty good buy setup, pretty good long play. Okay, then we have Ethereum. Ethereum is looking pretty bearish right here. It's not following Bitcoin. I'm not gonna waste too much time on Ethereum, but it's not looking good. I mean, I always just do this. I take the high, go to the low, and it's like a minus 38% drop. So that's a pretty significant drop. And look, but if Bitcoin rallies, if Bitcoin has a massive move up, you can expect Ethereum definitely to follow. Those markets are highly, highly connected. Bitcoin is a risk on asset as well. So when, let's say, the Nasdaq and the S&P are going up, most likely people will feel safe. They will feel more, let's say, not risk averse. They will like more risk, and they may invest into more risky assets. Okay. So that would be Bitcoin and Ethereum. DXY. Now, DXY is pretty important. I definitely want to cover the DXY, the dollar index. Why is it important? Because as we know, the fundamentals for the dollar are pretty bullish. They are pretty bullish. And that means the DXY, the dollar index, the measurement for the strength of the US dollar is going to just keep on trucking up. And that is exactly what it is doing right here. This is a pretty clean uptrend. I'm seeing no signs of slowing down. Only signs you could say, you can see this red candle and this one, but that's not that significant. So if this thing can continue going up, that means our pairs, such as the pairs I live trade, EU, AU, pound US dollar, will go down, will produce a nice trend, and I can benefit from that trend. So what I would personally prefer to see, if this thing can just keep on shooting up, that would be a pretty good long play, pretty good to look for buy setups on the DXY. So looking great. Hopefully it just continues shooting up. We have some news, I think. We should have NFP soon, as I mentioned. Yeah, so NFP is going to be soon, I think in 2 weeks. NFP is the next big event, I would say. That's going to be volatile. That's going to probably push the markets. And if the NFP is bullish on the dollar, if the NFP numbers come out strong for the dollar, it's going to be just a train to the upside. It's going to be pretty interesting. Final one that we're going to cover is US oil. And as always, US oil is just corrective, and it's pretty corrective. I don't really like looking at this pair. I may even remove it from the watch list, remove it from the live stream, but it's a pretty popular instrument, so that is why I have it. I just cannot seem to find clean price action on the daily chart on US oil. 1 hour chart is probably going to be even more erratic. And yeah, that's kind of true. I mean, we're just super flat on the 1 hour. So this is one instrument I would not touch, right? If I was even to add this into my live trading, or consider adding it, it would be last out of all of these ones. Okay, maybe Ethereum and silver would be in line with US oil, because they just do not have that sort of a clean movement that I'm looking for. At least recently. Let's zoom out a little bit. Yeah, it's just not for me. Just not for me. Pretty choppy price action. So you could make a case for a bearish pattern, which is a V reversal. Again, it's not the cleanest. You have gaps right here, gap, 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 gaps all over the place. I don't like this. Instrument, it's not for me. Maybe some people can have more luck with that. Euro US dollar just broke down. Now, this would be a pretty interesting reversal trade, okay? If I was trading the euro and the US dollar, this would be a pretty interesting reversal play. As I said, we have the ascending channel. We have the bearish drop down. We have the clean close on the bottom. And usually you can expect this to happen. You can expect a downtrend to start, okay? A downtrend to start. But again, my cutoff time is in 16 minutes, so I'm not going to be looking for a sell setup. Maybe going into the next week, this could be a play. Did I put it on the watch list? I definitely did. If in the next week price can continue dropping down and then we get a sell setup, maybe a bit of a smaller flag like this, I would be pretty happy. I would be pretty happy to execute a sell setup. Okay, if we get that continuation of the bearish momentum, as I said, we have the bearish pattern, and guess what? Overall, price is trending down. The dollar is very strong, gaining strength. So that would be a pretty good play. But again, that's about it. Small says, I don't feel comfortable with crypto, but I'm decade long on Cardano just because it's cheap. Well, great. If you're a long-term investor in crypto, I think that is the way to go. If you have some Bitcoin on the side, usually the split you can do, if you have some money set on the side, you have, let's say 10 grand, you can do, I don't know, let's say 15% in crypto or 20% in crypto, and then the rest in the S&P. Okay. Or if you're a trader, you can put in, and you have good leverage, you have a broker that offers 1 to 100 leverage. I personally don't, unfortunately, because I'm with IC Markets Europe. So I have 1 to 30 leverage. So there's no help for me. But if you have a broker with 1 to 100 leverage, that means you don't have to keep all of your equity in your account, and you can take, let's say, 50% out. So if you have 10K, put 5K in your broker, put 3K in the S&P, and put 2K in Bitcoin on Binance. Buy it on Binance, put it on your hard wallet. Don't keep your crypto on a crypto exchange. Put it on a safe hardware wallet. Okay. If you want more information about that, definitely join Zentum Trading. Nico is our crypto expert. He holds a lot of Bitcoin. Griff holds a lot of Ethereum, I believe, but Nico will have some tips for you at Zentum Trading. I'm gonna put in the banner right now. You can find Nico in our Discord and ask him what does he do for investments in crypto and which hard wallet he uses. But that's the split that he uses, I believe. So 50% in the broker, has good leverage, 30% in the S&P, 20% in crypto. It's a pretty healthy split. So good luck, small with your Cardano hold. Hopefully it explodes up. And that would be about it. Thank you guys very much for watching on this late Friday afternoon. I know you guys want to relax, have a drink or two. That is exactly what I want to do. So I'm going to be closing this stream right now. I'm going to see you guys in the next week. Hopefully we get some trends on the dollar pairs. Hopefully the big downtrend, right? The downtrend, hopefully it continues because it's looking pretty healthy. It's looking pretty good. So that's about it. Thank you for watching. See you next time.